Facebook long. I don't know, like, so you didn't want it here, right? But you want it here? I mean, I'm just not, those things don't excite me like that, you know? 206 to 210, it's a $4 move, right? Like, don't you just think that there are better things to pick on? There's something that's gone up already $4. And why, now tell me why after this move here. So you're asking me about Starbucks. So after this move, why do you think that's a short now? Why? Because it's moving to a new low? I mean, that's kind of rudimentary ABC kindergarten thinking, right? So it's not just something's making a new low or something's making a new high. It's where did it come from before it's doing that? And this is the mistake that a lot of traders get into. Like if something, let me demonstrate something for you here. All right, let me demonstrate something for you. Here's a stock that makes a new high right there. All right, there's the new high. But that's very different from this new high, right? Now, boom, this new high here is very different from this new high. Because where did it come from to make the new high? See, this one came from way down here and ran a race before the new high, right? This one hasn't come from very far to make its new high. So this is the better new high. This is not a takeable new high. So in my opinion, when you have a stock that's come from there to make a new low, that new low fails a high percentage of the time because it's already been running a race before the new low. Does that make sense, guys? What I just explained to you? All right. Where is the origin of your move? Is your stock tired? What is your stock's volatility range? How can you play a stock and not know its volatility without knowing its volatility range? Like if you play a stock that has a $2 volatility range, which means that on very strong days, it has the potential to move $2. But now your stock is up $2.50 and you want to buy it. So it's already outside of its volatility range, but and you get a buy signal, but the buy signal is after a $2.50 move. Like, why would you want to do that? Why would you want to take a buy outside of your stock's volatility range? And this is where knowing your family is very important. What's your family? The 6 to 10 stocks that you have chosen to be a part of your family, that you live with every day. You eat your meals with these 6 to 10 stocks every day of your life. You watch their movements every day of your life. You don't drift. You don't switch up. And yes, there are some mornings that they don't just come to you. But most days you do get something from them. And you know these 6 to 10 things like the back of your hand. You know them like your children. You know their volatility ranges. You know what's an excessive gap and what's not an excessive gap. You know what's violence and what's not violence. Why? Because you're with them every day of